Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. This week, we're doing something unique with the podcast, and then I'm offering a series of interview previews for interviews that will take place in the DIY Investing Summit next week, which begins Monday, January 23rd. And the summit is being put on in partnership between Seeking Alpha and Investor in the Family, and each one of these interview previews stands alone in its value, but it gives you a glimpse of what the rest of the interview may be like, as well as the rest of the summit, which overall has 25 interviews from some of the top investors from Seeking Alpha. Registration for the summit is free for a limited time, so be sure and check it out at DIYinvestingsummit.com. That's DIYinvestingsummit.com, or you can check out any of the links in the show notes or the article. And hope you enjoy this interview preview with Mark Hibben. If you had a national platform, which technically you do with Seeking Alpha and then this summit, to give DIY investors your top 3 pieces of investing wisdom or advice, what would that advice be?
Well, I think there's 3 basic principles that I operate under in making any of my decisions, and the basic principles are: do your homework, invest in what you know, and stay focused. Do your homework basically says, and this is just based on my own personal experience and the mistakes that I made early on in my investing career, is I just don't see a substitute for going through a lot of the information that companies provide investors directly, rather than relying upon other analysts or interpretation by business journalists and so forth. So, I think it means reading through quarterly reports. It means listening in on conference calls. It means keeping up on current events in that company. And I just don't see an alternative there. I think you have to be that informed. As far as investing in what you know, I think it sort of follows from the first principle, because doing your homework gets to be a lot easier if you already have a pretty good general base of knowledge with regard to the area, especially the technology area in which that company is operating in. So if you know a lot about health services, then I think you should invest in a health services company. If you know a lot about pharmaceuticals, then you should invest in pharmaceutical companies. I know a lot about a lot of different areas of technology, so I'm kind of spread out a little bit. But basically, I'm focused in the key areas related to semiconductors and consumer electronics.
Excellent.
So that's kind of where I focus in. And having that background knowledge just makes the do your homework part so much easier, because you already basically understand what the company is doing. And that's really important.
Absolutely.
Yeah. And then as far as, and that applies beyond technology. I mean, if your area of expertise is retailing, then it should be like retailing, so forth and so on. And then the other area the other principle being to stay focused, I think it really just follows, once again, from the homework requirement. You don't have the time to research that many companies. You don't have the time to keep up with the current events of a dozen different companies. And I don't think an individual investor should try to do that. I think you want to stay focused on a few companies that you understand and you can commit the time to follow those companies. And then if you feel the need to be more diversified, then you go for a mutual fund or an index fund or something to sort of balance out your portfolio.
That's good.
Yeah.
Taking some notes real quick. Great. What books have had the greatest influence on your investing?
Books. Well, I haven't read a lot of like how-to investment books. I will admit that. So I'm kind of self-taught in that regard. I do have some background education in economics and business, and the books that I always recommend to prospective investors are some books by George Goodman. George Goodman wrote a series of books under the pseudonym Adam Smith. Adam Smith was a famous British philosopher of economics. so he adopted that name. And he wrote a what I think is a seminal book of about Wall Street and investing called The Money Game. And The Money Game was actually written in the 60s. It's a fairly old book. But when I think about the books that I've read that are relevant, The Money Game really stands out as still incredibly relevant to investing today.
Very cool. Yeah. Excellent. If you could go back in time to when you first started your investing career and give yourself some advice back then, what would you tell yourself?
Yeah, don't sell my Apple.
It's really fun getting the response to this question because almost everyone has something that they're like, buy this or don't do that because of what it would have meant. So don't sell. When did you sell?
Well, I traded Apple fairly heavily back in the late 90s and early 2000s. And I wish I just kept hold.
Yeah.
I mean, I didn't lose any money or anything. I made money, but certainly I'd be much better off if I just held it.
Yeah. If only, I feel like that's true for so many things that I and all of us have done. So don't sell Apple in the early 2000s. That's a good one.
Yeah.
How would you summarize your investment philosophy? We've kind of hit at it a little bit throughout the interview, but how would you summarize it? And then how does that specifically look as you build your portfolio?
Well, I think the main thing that I do that may be at odds with a lot of beliefs about market investing is that I really try to ignore what the market believes and just focus on what I think is the intrinsic value of the company. And you can argue at length about, well, what does that mean, intrinsic value? But I'm looking for technological advantage. I'm looking for a certain amount of market savviness and agility on the part of the management of that company. And I think where I'm hoping to make gains is that I'm assuming that the market is lagging my insight into the company. So that there's an implicit assumption that even though the market is efficient in the long term, in the short term, it hasn't quite figured out that this is the company to invest in. Therefore, it's good to get in now and be a little ahead of the market. And certainly that was true with NVIDIA. I was definitely ahead of the market there. I was actually ahead of a lot of analyst sentiment as well on NVIDIA. So I'd say that's the key philosophical principle that I use in making my decisions. I'm assuming that I can get out in front of the bulk of the market on a technology company because I understand the technology company better than the rest of the market does.
That's good. And as far as how that looks as you build your portfolio, it sounds like you mentioned you have your big three positions, and obviously I'm sure you have some other stocks as well. But
not currently, but as I mentioned, the plans for diversification this year are certainly going to move into other companies, and I think the key ones were TSMC and Microsoft, almost certain.
So so then I guess the rest of your portfolio would usually be in some kind of an index or an ETF or something?
Yeah, it's just, something that's pretty liquid.
Good for you. Do you have limits on yourself in terms of how large you will allow like an individual stock position to be?
No, I don't have anything. I don't have any formula in that regard. I basically have everything more or less equally weighted right now.
I hope you enjoyed this excerpt from the DIY Investing Summit. If you want to hear the rest of the interview and the other 24 interviews from the summit, be sure and visit DIYinvestingsummit.com. That's DIYinvestingsummit.com, or you can click any of the links in the article or show notes to this episode, and it'll take you straight to the registration page. And remember, the summit begins Monday, January 23rd. You can still register after that, but you'll miss some of the content. So register by Monday, January 23rd at DIYinvestingsummit.com, and I'll see you there. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.